We are in a cycle like we've never been. This is completely brand new territory for all of us. And it is my very strong opinion that the top for crypto is not in. And I'm going to explain very simply in around 10 to 15 minutes in this video. This is data driven. This is a Bitcoin chart zoomed out, understandably so. The move that Bitcoin has kind of gone into, this all-time high, a second all-time high, kind of like a second swing high of this bull market. Many people comparing to this move back here. And just understandably so, it looks very similar, thinking, hey, we're about to enter a new bear market. It's game over for this cycle. Altcoins didn't even move. I get it, but I completely, very strongly disagree. And let me explain exactly why. If you are a person that doesn't like to fall into the short-term panic, you're trying to get a grasp of the macro view from a data-driven analytics perspective, this video is for you. So please hit the subscribe, hit the like on the way in. We will be using a Bitcoin risk model in this video in our intelligence system. If you want to check it out, hit the link below. We have a very big sale going on in terms of the intelligence system, which has a lot more than just the risk models. Please pay special attention to this post. It's foundational to everything we're about to discuss. For your information to gamblers, quantitative tightening is far more important to market direction than fundamentals, technicals, and sentiment. And I can't help but highlight that because we do analysis all the time on this YouTube channel. And we do pay attention to these things, right? The technical analysis aspect of things, even sentiment. But quantitative tightening, quantitative easing, Fed monetary policy, they are incredibly important to these cycles. I think a lot of people are forgetting just to continually remember this. By the end of summer, the Fed will be taking $95 billion a month out of markets every month, double the pace that imploded markets in 2018. You might be like, what? This does not sound bullish at all. And you know what? It wasn't at the time. This was July 2022. This was quantitative tightening, the year of quantitative tightening. This was the year of, if we look at a Bitcoin chart, quantitative tightening, the bear market leading into this quantitative tightening and the anticipation of it, the interest rates increasing in 2022 and 2023. And very simply, everybody, very simply, what was happening all back here and here is absolutely nothing like what is happening here. Put aside a pro-crypto administration, put aside things like the Stablecoin Act that is, on the table, hopefully being passed soon. Put aside headlines like this I just saw. Trump media closes deal to put Bitcoin on his balance sheet to make it one of the largest Bitcoin holders. Put aside the governmental race for Bitcoin and Bitcoin strategic reserves. Put aside institutional adoption of altcoins and all these altcoin ETFs that are just not even approved yet, but getting ready to be approved. Put it all aside. Let's talk about the Fed monetary policy. Let's talk about the balance sheet. And so here we are, that post July 2022, look, quantitative tightening for years. This is what we just went through. This is what we just survived. And we are waiting for the pivot out of that. We are waiting for the expansion on this balance sheet. I saw this post. This was May 19th. Between May 6th and 9th, the Fed quietly bought $43.6 billion in US Treasuries, including $8.8 billion in 30-year bonds in a single day. That's not normal. It's a stealth return to quantitative easing, a quiet injection of liquidity. I'm not saying quantitative easing is here just yet. If it were, I'm sure we'd have a little bit of a different, sentiment even going on and even different price action. But I will say we are headed in that direction. And even if I know Jerome Powell has not lowered interest rates soon enough for many of us thinking that, but that doesn't mean he's not going to. And it's highly anticipated that even if it's later this year, interest rates will start coming down. This is entirely different than what was happening in 2022 to 2023. So that alone is just something you cannot ignore. We cannot ignore. I am not saying that Bitcoin can't just have these big dips, right? These big mid-turn dips. And this is one thing so far that has already separated Bitcoin from previous cycles. These multi-month consolidation phases are completely different than the parabolic bull runs of previous cycles. That already has separated itself. But now we're entering a time of QT and lower interest rates still just on the kind of short to midterm horizon when we think about cycles. I have trouble being bearish right now, even when altcoins have not broken out and Bitcoin is kind of just hovering around 100,000 for months, I have trouble being bearish right now. And so if we take what we just discussed now and we look at our risk models, check it out. On the Bitcoin risk model, guess what was happening back here? Going into, this is the year, here's the swing high, going into this year of quantitative tightening, 2022, all of that mess, and interest rates increasing. The risk score for Bitcoin topped out like in the upper 70s. And the first swing high was at the 90s, right? If we go and we just look at the current cycle, we've not done any of that. Bitcoin is at in that previous swing high at a 64. Currently, this most previous swing high, all-time high, 55. This first swing high, 65. And right now, Bitcoin risk score at a 52. These risk models take into account tons of data. I know I mentioned it a lot, but this is, if you take a glance on the screen, what our risk models are made of. And we're gonna continue to integrate data into these risk models. But I can't point this out enough when we're really taking into account Fed monetary policy and the pivot that is getting ready to happen. We're at a 52 hold in terms of this risk model for Bitcoin. This, to me, screams bullish. It screams, to me, I'm just trying to interpret to you how I'm reading this data, but it's telling me be patient in this cycle. And we can take this a step further. We can go to actually the total crypto market cap. This is altcoins included, right? And Bitcoin included. This is just everything. Notice, we've not really meaningfully broken all-time high. We had this all-time high on this chart, but when you would look at last cycle, we were getting into this region right before the beginning of quantitative tightening, interest rates increasing. This is the region where we're getting into. Are you telling me that it's all over now? We've barely even surpassed that area last cycle, as we're about to do the opposite of what happened this year? And by the way, it's not just the opposite from a Fed monetary perspective and QT perspective and interest rate perspective. You know what else was in here was the SEC absolutely trying to destroy crypto. Now we have a crypto SEC. We talked about in last night's video, Hester Pierce, the crypto task force, the head of crypto task force, SEC commissioner, defending altcoins. And we have just a pro crypto administration. We don't have Celsius falling apart, an FTX scam and all of that. And we're about to go into QT, or I'm sorry, like the end of QT, the beginning of QE, interest rates decreasing. And you're telling me this was it? That was it? We could consolidate, everybody, right? But I do not think we're entering a bear market. I think the opportunity here is extended for people that want to just position themselves strategically, figure this out. We have more time, is all this is. That's what I'm seeing in terms of this data. And if you look at a risk model for the total crypto market cap, it's at 30. So this is Bitcoin and altcoins. It is at 30. It was at 44 kind of at this previous swing high. It was at around 45 in the March 12th swing high, 2024. But look at previous bull cycles. We've not entered that territory. And you can look at the risk score and be like, you know what though? Like we're at a 30 and guess what? We were around 30s in May 2022. Again, what was happening at that time? SEC, crypto companies falling apart, quantitative tightening coming into play, interest rates increasing. That's what was happening. We're not there. That's not what's happening right now. I don't want to make this a long video. I really don't. I just, it's such an unpopular opinion, at least for me to be bullish in crypto market. And I really wanted to make this a quick demonstration of why, from such a simple perspective, trying to integrate into this, the dynamics of quantitative tightening and the Fed balance sheet. And I wanted to try and make it as simple as possible. And these risk models in our system is what is incredibly helpful to me and our members. If you want to get in here, please just hit the link below. You can use our risk model. So you can click an altcoin like Ethereum or something, and you can go to our exit planner and you can plan and strategically plan your exits in these cycles based off of when the risk model is hitting certain levels. So this is something I'm incredibly excited about, and you'll be hearing more about it as we continue in this cycle. So if you found this video helpful in any way, please subscribe. Let me know your thoughts below. Any bulls out there? I know there's a silent majority of you that are just, you're picking up what I'm putting down. You're out there. You're just trying to be patient, just like me. And I just want to say I appreciate each and every one of you. I know you're out there. And if you enjoyed this video, please consider giving it a like. I'll see you all in the next video. God bless.